Welcome back. You're still watching Business Morning. Now let's move on to our first conversation this morning. Nigeria's credit market sits at a critical junction with rising interest rates, inflationary pressures, and tighter liquidity. Businesses and individuals are finding it increasingly difficult to access affordable financing. At the same time, banks are grappling with growing credit risk and a shifting regulatory environment. As the economy adjusts to these realities, questions emerge about the future of lending, investment confidence, and financial stability in Africa's largest economy. And joining us to unpack these issues is Olusegun A Sonowo. He's a seasoned finance, credit risk, and investment advisory expert with over 2 decades of experience across Nigeria's banking and investment sector. He currently serves in executive leadership within the investment and real estate finance space, offering insight into credit markets, risk management, and capital growth strategies. All but one person. Good morning. I'll actually, for the purpose of the interview, I'm going to call you Mr. Shonowo.
Olusegun Sonowo.
Oh, Olusegun Shonowo.
Olusegun Sonowo.
Okay, Olusegun Shonowo. All right, it's good to have you on Business.
Thank you very much.
This is a very interesting.
Thanks for having me here.
Yeah, you're welcome. This is a very interesting and a conversation that we are supposed to have, an important conversation. So briefly, take us through your assessment of the Nigerian credit market, and how would you describe the lending environment today for both banks and borrowers?
Okay, as much as technical as this is, I'll try to simplify it so that everybody, even the market woman on the street, can understand what we're talking about. Yeah, we want to simplify it, because if we bring in all the technical jargon, it will be like we've had another session. So for me, and generally looking at the credit environment, it seems a bit tense. It's quite actually very tight. The credit environment is very tight. Nonetheless, right, we can't say it's hopeless. There is hope. All that is required, particularly both for the coming from the small scale businesses, one of the things that is required that will really help them at this point is to keep their books in readiness for whatever or wherever they are going to. Because one of the greatest inhibitions to getting credit for SMEs, as we're going to talk about as we go on, is lack of proper records, right? It's at the point of, or at the junction of wanting to access credit, that you now want to start putting your books together. The banks will not, as the lenders, they will look beyond what you're presenting to them at the moment. They will want to go back into your history and see where you're coming from. So that makes it a bit difficult. Like SMEs, oh, the banks are not supporting us. Nobody. Yes, that is true. The bank will not, because what the banks are giving you is not their own money. It's other people's money. If you give me your money as a bank and I give it to him, all right, without doing proper records, and by the time you come for your money, I'm not able to give it to you, it's going to be a problem for me. So while we might want to say generally on the outlook, on the face of it, yeah, the market, the environment, the credit environment is a bit tight, but it's not hopeless. There's hope for the borrower. There's equally hope for the lender, as long as we get some things right, which I hope we'll be able to talk about as this session goes on.
All right, now let's take a look at the economic volatility and credit risks with inflation, currency fluctuation, and policy uncertainty. How do you think this affects macroeconomic how has it impacted the macroeconomic space, and how do you think it has impacted credit risk?
Yes, let's start from the last.
Okay.
Uncertainty.
Okay.
Uncertainty. And truly, it's not helping matters. A lot of, even from FDI, foreign direct investors, who want to come into the environment, they are not sure of what is going to happen next. Our political landscape is not helping matters, right? Assuming we have a situation where we can say for the next 10 years, this is the economic thrust of our country. It will give some level of confidence, but because of the uncertainty, right? Even me as a lender, I may look at this sector of the economy as very viable at the moment, but I'm so used to this system that I can't wholly commit myself. And because I can't wholly commit myself, I can't commit myself for the long term. I can only look at it. So as a lender, it's making things difficult. Also from the angle of inflation, you talked about inflation, right? When inflation simply means rising prices. When prices are rising, I go and borrow money from the bank. The bank is willing and is magnanimous enough to give me the money. But when prices keep rising, right, prices keep rising, interest rates are increasing. It makes it difficult for me as the borrower to be able to meet up with my obligation to the bank because I can't get enough money for me to do my business. Prices are rising. Those who are supposed to buy my product are not able to buy. Even if they buy, the worst part of it is when it comes to FX, dollar-denominated transactions. For instance, I go to the bank, I borrow funds at maybe 1,000 to $1, and by the time I want to repay, I'm going to repay at 1,450 to $1. How do I meet up? I'm not able to meet up. So all these factors mixed together are seriously impacting negatively on the credit environment that we have, that we have found ourselves.
All right. You mentioned earlier banks not giving monies to the SMEs, and it's feeling like they're not supporting them. So don't you think banks should be able to manage supporting and risk management instead of just leaving everything the way it is? Don't you think there should be a balance between supporting and risk management?
Exactly, and I'm happy you picked on me that what I said earlier, and I also want to refer to what I said earlier, that one of the greatest inhibitions to banks giving money to SMEs is poor record keeping. If you are able to keep your record straight, it will help me as the borrower to be able to assess you and even determine what you are qualified for. At some point in time, right, in your business, you might think what you need is 500 million. Or since you're talking about SMEs, you might think you need 50 million. By the time I do your assessment, I might realize that you might even, giving you 50 million will be suffering your business. You might need 75 million.
Yeah.
But that will only be possible if you have the record. So I will push it back. I will push it away from the banks. I'll push it back to the business owners, the small and medium enterprises. Say, let's start and know that we want to have a business that is growing. In fact, I have one of my coaches who say that I don't like being called a small business. I prefer to be called a growing business. Because if I see myself as a growing business, I'll put my records in order so that at any point that my lender is coming to see me, he will have something that he'll be able to. So let the SMEs get their records, put themselves in a proper business shape, and it will be easier for the banks to support them.
Right,
the banks are willing to support.
They're willing to support.
The banks are willing to support. They have
going,
their own challenges, yes. But
I'm still going to hit on that. So is that what's actually tightening the whole process of having to giving money? Because some of these SMEs, they actually claim that the banks have actually tightened their credit. So is that one of the reasons or just the reason?
One of the reasons.
Okay.
One of the
what
reasons.
Other reasons?
Quite a number of reasons. Even the policy for coming, which is, the policy angle, right? The ratios in the economy are not giving enough money. With the increase in cash reserve ratio, with the MPC maintained at particular levels. Currently the cash reserve ratio is about 45%. That means it's reducing the funds I have available. It's reducing my liquidity. So for me to give out to, if I'm willing to give out to 10 people, and all these 10 people, let's make it easier for us to understand. Let's say I have a billion naira. If I have 10 people who are requesting for a billion, that means I can afford to give 100 million. But out of that billion, right, 45% has been taken away from me. Reduces what I have to give. So if I'm going to give to anybody at all, right, it means that I have to properly scrutinize who I am giving to. So it's beyond that. It still goes back to the fact that, and those who will now qualify will be those who have their records straight, who have their books in proper order, who are coming with genuine businesses. Because truly, as a recovery person, when you do some assessment, you realize that some transactions are dead on arrival. I call them dead on arrival. Yeah, it's just a package transaction. It's dead on arrival. There's nothing behind. There's nothing behind. It's just a facade. Just put some things together. So it's not just books alone. Even the policy, the dynamics, the indices in the economy are also reducing what the banks can afford to give out. So that makes it look as if they are squeezing their hands.
Yeah.
They can't, we are only pretending as if we are squeezing our hand. We can't give more than we have. Yeah, the banks only give as much as they have.
Let's look at still pointing on the policy and regulatory environment. Do you think the CBN is actually doing enough to actually stabilize the lending conditions?
I would say the CBN is doing so much as it can do, right? We're trying to, by increasing the cash reserve ratio, what causes inflation in simple, like I said, we're going to simplify this for even the market woman on the street to understand. Simple inflation, inflation simply means more money chasing fewer goods. So by increasing the cash reserve ratio, what CBN is doing is that they're trying to mop out cash from the system, so we have lesser money, right, chasing the goods. So we're trying to bring down the inflation level, right? But that is also having its own adverse effect, while at the same time they are increasing, the cost of funds for the banks, right? So the CBN is trying to do a balancing, right? But all the same, a lot more can still be done. The CBN can pump money into the economy by making affordable credit, right? So, we create special funds for particular purposes. For instance, as they're doing currently in the real estate environment with the MREF, which is the federal government funds to fund real estate investment at less than 10 digits, approximately 9.75, right? That's one way that the bank, that the government, that the policy through its policies is helping the economy by releasing those. That's 10 digits. 10%. Well, they actually wanted to say it's a single digit, but once it crosses 9.75, it's already more than. So that's what I'm saying, approximately 10%. So the CBN can actually do a lot more by easing. It's going to be a special fund for that particular purpose. It won't be the same money that the banks have that they still have to share out. So CBN can still do a lot more than they're doing currently.
All right. So alternative financing, beyond the traditional bank lending that we all know, what other alternative do you think we can have?
Okay, there are quite a number of alternatives that can be explored. Private lending, for instance, though that is limited, there is a limit to which that can go. Venture capitalists is another way. Rather than everybody focusing on deposit money banks, which we call commercial banks, so we can explore that. We can explore the angle of cooperatives. We can explore the angle of Infra Credit is one way that is helping to support long-term lend. Yeah, because deposit money banks cannot afford to fund long-term credit. So with Infra Credit giving guarantees and say, okay, if this person defaults, they want to do a solar project, they want to do a power plant, they want to do a toll road, which are long-term projects, Infra Credit is giving credit. So that's one other way apart from the regular deposit or commercial bank loans, which are usually for the short term. While for SMEs and small, we can explore the angle of cooperatives, right, and personal savings, family and friend supports to grow the business to the point that you can now approach a regular bank to get funded.
All right. So from your experience, how do you think these financial institutions, don't you think they should find like another way when it comes to recovery? Or do you think they're actually in the right path?
Well, and you mentioned from experience, incidentally.
Yes. Two decades.
Yeah, that's one area that I spent a good part of my final years in banking, recovery. And well, just before I left, a number of things were already changing. The conventional method was usually to go after the defaulter, go after him, recover the collateral, and do all that. But we got to the point that we had realized that wasn't going to help matters. After recovering the collateral, who buys it, right? I tell people that when the bank tells you that they want your collateral, it's not because the bank is into the business of selling properties. No, for instance, because easiest collateral is actually property. But there are other ways that the banks can look at rather than going directly after the collateral or going after the business or going after the person. By the time you kill the business, there's nothing for you. At the end of the day, you may not get your entire money. What if we restructure? What we look at the situation where, okay, you are actually owing. Okay, Meaningful Realtors or Mr. Sonowo, you are owing. Okay, we even go to the point of what caused your default. Maybe we gave you too much money. Maybe we gave you less money than you needed. Like I gave the example earlier. By the time we examine your books and you are asking for 50 million, we realize that 50 million will not help your matter. 75 million will help you. So we do a restructuring and say, okay, what if we stretch this or we structure this fund that will tally with your cash flow? For instance, let me give you a practical example. You give money to a school and you say the school should pay monthly. A school does not make money monthly. What if we restructure the loan to the school and say you pay per term every three months, which falls with the calendar of when money will so? Because in loan, a default in a particular month is capitalized and it worsens what you were owing. Even what, that's why you see people will come to the bank and say, I borrowed 10 million. I have paid 15 million. And you say I'm still owing 12 million. How come? Simply because of the defaults in between. So a restructuring can be one of the ways that banks can help, rather than saying we want to go out. So recovery can be better done than the conventional or the old ways of saying we go after, once you default, we go after your collateral. No, it can be better than that. One of the easiest ways is to do a restructuring along that will flow with the cash flow of the business that is defaulting currently.
Smart. So what key reforms or strategies would you recommend?
Still goes back to okay, like we said earlier, one of the ways, one of the things that the government can actually do to help the system, because without the growth, without credit, I'm not sure I mentioned that without credit to businesses, the economy can hardly grow. The businesses have to be supported for the economy to grow. So one of the ways still goes back to the government. The government can make funds available, right, to special purpose, fund, not just general fund that you saw just pump into the bank. We say, okay, if we want to grow this we want to grow the agri, and the government has been doing that over time. But also from experience, we realize that some of those things, like I said, dead on arrival, they just package and, oh, it's free fund, and everybody sees that's free fund, right? That is one area. The government provides the money, that's on the one hand. Beyond providing the money, there should be an education of those who are coming to borrow. Let people understand that this fund that is coming to you is not your portion of the national cake. So literacy, credit literacy to the business environment is equally very important. That's number two. Number three, you can equally encourage people to develop a savings culture. I've been working for a couple of years. I know I'll be going into business. What if I stash up funds that will make it easier for me to go into my business by the time I want to go? And that will only be possible if I have developed a savings culture over the period. So by the time I'm going into business, I have funds to draw from. If I'm going to need support at all, it's going to come by way of, minimal support based on where I'm starting from. So those are some of the reforms that can be put in place: savings culture, literacy, and government supports.